Namaste, welcome to Arthaniti, where we discuss money and money related tools to help you in your everyday investing decisions. I am Dr. Shefalika Gokhale. I hold a PhD in business practices of mutual fund houses. These videos are part of the investor awareness initiative of Samyak FinServe. In today's video, we will discuss a rising star in the mutual fund industry, a much talked about, a much hyped mutual fund house. I'm talking about Quant Mutual Fund. Now, it has been in news for its high performing schemes. The AUM, assets under management of this fund house, have eased from 166 crores in 2019 to more than 84,000 crores in 2024. What is the reason for this enormous rise in AUM? Let us discuss in this video. Quant Mutual Fund is relatively a very young player in the mutual fund industry. It was established in 2018 when Quant Capital took over Escorts Mutual Fund. Now, Escorts Mutual Fund was established in 1996. Till 2018, it had managed an AUM of only around 200 crore rupees. Once Quant took over the fund house, significant transformation happened. Changes were made in the investment strategies as well as people at the helm of the schemes. Now, the result, as I told you previously, is for all of us to see where the AUM of the fund house has risen from roughly 166 crore rupees in 2019 to around 85,000 crore rupees in 2024. The fund house emphasizes use of data driven investment strategies and advanced technologies to outperform the market. The phenomenal growth of the fund house only showcases the rising trust investors have in the unique approach and robust performance of Quant Mutual Fund. To put into perspective the phenomenal rise of Quant Mutual Fund in the last 5 years, we can compare it with other older known fund houses. Take, for example, ICICI Mutual Fund, which was established in 1993, HDFC Mutual Fund, established in 2000, SBI Mutual Fund, which was established in 1987. All these well known older fund houses took nearly 20 years to reach the same level that Quant has reached in 5 short years. Quant's CEO Sandeep Tandon has an experience of nearly 33 years in the field of investment and research. He is a strong proponent of leveraging data and technology in investment decision making. He has invested roughly 180 crore rupees in setting up a strong, sophisticated data generation and analysis framework, which helps to generate data regarding weather patterns, geopolitical happenings, market sentiment analysis over the years, and so on. AI is changing our world one algorithm at a time. Well, mutual fund houses are no exception to the revolution AI is bringing in our investment journey. Quant Mutual Fund stands out for its unique investment strategies, which are based on data analytics and algorithms. Unlike traditional fund houses, which rely on fundamental and technical analysis, Quant uses predictive analytics and artificial intelligence to forecast market trends and make investment decisions. This approach allows them to be agile, quick in their response to market changes. The process that they follow in their investment strategies is such: their data analytics framework identifies stock using various quantitative factors. A team of 18 analysts does qualitative analysis based on these quantitative factors on various parameters. The stocks are then presented to fund manager and the chief investment officer. The final allocation is taken by the fund money management team, but the CIO, who is Sandeep Tandon, also the CEO of Quant Mutual Fund, has a veto power. This is the process that they follow in their investment strategies. Has this investment style proven to be successful? Well, the performance of some of its stocks certifies the effectiveness of this investment strategy. Quant Active Fund has delivered an annualized return of 108%. Its focused fund has delivered 78% return, while its small cap fund has delivered a huge 154% return. Quant management philosophy employs VLRT methodology, which means valuation, liquidity, risk, and timing in its stock selection. This may sound a bit complicated. To put it in simple words, it uses a dynamic approach in selecting companies. Their investment is sector agnostic. Their investment style is unconstrained. They choose from a wide universe of companies. This helps them to take quick decisions to market changes. Quant Mutual Fund is known for its high portfolio turnover ratio, which means it very frequently buys and sells securities in its portfolio. Now, all this is again unlike traditional mutual fund houses who invest in securities from a long term point of view. This high ratio may lead to high transaction cost, but it allows Quant to capitalize on short term market opportunities as well. Let us discuss the pros and cons of the investment style followed by Quant Mutual Fund House. Let us first focus our attention on the pros. The first advantage that I can think of is agility. See, if you are investing in an active fund, not a passive fund, leveraging market changes is the key, right? So, the agility that Quant Mutual Fund House brings with its investment style is a welcome advantage. Secondly, data driven decisions. Uh, this reduces the human bias in the decision making process. The decisions are more focused on facts and data which are presented by the framework that the mutual fund house has invested in. Thirdly, high returns. Records have shown that because of this approach that Quant has put in place, its mutual fund schemes have given higher returns than many active mutual fund schemes of other fund houses. Till now, we have painted a rosy picture about this fund house as a possible investment opportunity to look out for. But as investors, we should be aware about the disadvantages of the investment strategy that this fund house uses. Correct? Let us look at the cons. First and foremost, high transaction cost. I have already told you that Quant has one of the highest portfolio turnover ratios in the industry. This leads to high transaction costs in its schemes. Secondly, the investment strategies followed by Quant might be too complex for layman investors like us to understand. One key rule in investing is always invest where you understand the investment. Complexity of the investment strategies in Quant contradicts this key rule. Lastly, there is high risk in this style of investing. Frequent trading and reliance on data predictions add to the risk factor. Now, data predictions might not always be right. Why I am saying this? Well, we have a recent example. In the recently concluded Lok Sabha elections, the predictions of exit polls and the actual results did not tally to a very large extent. That shows clearly that there is a possibility of error in data predictions. This has to be kept in mind by investors while taking investment decisions in such type of investments. If you are considering investing in Quant Mutual Fund, keep these points in mind. Firstly, understand their strategy. Well, it is often said human bias is part of investing. Gut feelings and hearsay often trump good data. You have to familiarize yourself with their data driven and high turnover approach. Secondly, risk appetite. Ensure that your risk tolerance limit matches the fund's high risk, high reward profile. Thirdly, diversification. always consider diversifying your investments to mitigate the potentially high risk from your investments in quant mutual funds. Keep these points in mind and then think about investing in this fund house. Quant mutual funds' impressive rise and innovative strategies make it a fascinating case study in the Indian mutual fund industry. However, as with any investment, it is crucial that as investors you do your homework and check whether the investment aligns with your financial goals and risk appetite. Taking services of a financial advisor are always welcome. This video was not a promotion for this particular fund house but an education video which analyzed how the fund house is performing and how they are implementing unique investment strategies in their schemes. I hope this video has added value in your investment journey. I would be happy to hear from you in the comments box about anything that you want to add for in this commentary. Until next time, stay safe and goodbye.